You know, it's pretty hard to miss what's been going on with gold lately.
Yeah, the price action has been remarkable.
It's on a tear, right?
Yeah.
Hitting records, blowing past $2,450 an ounce back in 2024. And it stayed really high into 2025.
Suburbanly high is a good way to put it.
It really gets you thinking about the bigger picture. Is this just like a temporary thing?
Yeah.
Or is something more fundamental happening?
That's the key question, isn't it?
Could the U.S. dollar, the currency that's underpinned global finance for ages,
Yeah.
could it actually be facing a real challenge now as the world's reserve?
It's a fascinating question and honestly, a really significant moment potentially for the global economy.
So that's exactly what we're diving into today.
Yeah, and it's totally natural that people want to understand the forces behind all this. So in this deep dive, our goal is really to unpack why gold's having this incredible surge
Okay.
and what are the central banks actually doing with their gold? What vulnerabilities might the dollar be showing? And crucially, how does all this connect back to, our listeners, whether you're looking at your own finances or maybe running a business?
Because it feels connected.
It absolutely is. We've pulled together some really compelling sources, and the plan is to pull out the essential nuggets, the key takeaways, so you can get a handle on this complex situation without getting lost in the weeds.
Perfect. Okay, so let's start with that incredible run on gold. I mean, all-time highs.
Yeah.
That's not an everyday event. What's the basic story there? What's really driving it?
Well, what's really striking is how several big global trends are sort of converging right now. These record prices aren't happening in a vacuum.
Mm.
A major factor is just significant global uncertainty. You look around, there are geopolitical hotspots, economic aftershocks from recent years, just a general feeling of instability.
Yeah, you definitely feel that.
And in times like these, investors, institutions, they tend to look for safe havens, assets seen as reliable. And gold, well, it has centuries of history playing that role.
The classic safe haven.
Exactly. Then you layer on top of that these ongoing worries about inflation, the fear that the cash in your pocket buys less tomorrow than it does today.
Right. That erosion of value.
Precisely. And that makes gold as a hedge against rising prices even more appealing. So you've got this mix, uncertainty plus inflation fears. It's really fueling demand, pushing prices up.
So it's not just speculation. It reflects a real search for safety.
That's the core insight, yeah. It's a widespread move towards security in what feels like a pretty turbulent world.
Okay, that makes a lot of sense, this flight to safety.
Yeah.
But it's not just individuals buying gold coins, is it? The sources we looked at really hammered home the role of central banks, almost like a buying spree.
Oh, absolutely. The scale and, frankly, the speed of central bank gold buying it's really something. In both 2022 and 2023, they added over 1,000 metric tons each year.
1,000 tons. Wow.
Yeah. And then get this, the first quarter of 2024 alone, they snapped up a record 290 tons.
Just in Q1.
It's just Q1, highest first quarter total ever recorded. And interestingly, it's not primarily the usual suspects, Western central banks leading the charge.
Oh, who is it?
The main drivers are coming from emerging market economies. Think places like China, India, Turkey. They're the ones really driving this demand wave.
That is interesting. So why? What's the big attraction for these central banks? Why this sudden enthusiasm for gold? What's the strategy?
Well, if you connect it to that bigger picture of global finance,
Hmm.
the main motivation seems to be a very deliberate strategy: diversification away from assets denominated in U.S. dollars.
Ah, okay. So moving away from things like U.S. Treasury bonds.
Exactly. For
Yeah.
decades, a huge chunk of central bank reserves has been parked in U.S. treasuries.
Yeah.
But there's this growing feeling, especially in these emerging economies, that they want to reduce their reliance on the dollar.
Why? What are the risks they see?
Well, risks like potential currency depreciation, broader financial instability may be linked to U.S. policy or debt. Gold, being a tangible asset not tied to any single government's decisions, it acts as a really valuable hedge in that context.
A hedge against dollar risk.
Precisely. You could think of it as these nations wanting a bit more, let's say, financial independence from the ups and downs of traditional currencies, especially the dollar.
You mentioned currency depreciation, and the articles definitely talked about inflation eroding the value of fiat currencies like the dollar. Can you maybe explain a bit more how gold protects against that? And maybe just quickly, what is a fiat currency for listeners?
Sure. So fiat currency, it basically means money, like the dollar, the euro, the yen. Its value isn't backed by a physical thing like gold anymore. It's based purely on the government that issues it and, importantly, people's faith in that government and its economy.
Got it. Faith-based money, essentially.
In a way, yes. Now, think back to the pandemic. The U.S. Significantly increased its money supply to support the economy.
Right, a lot of money printing talk.
And that was a contributing factor to inflation peaking at, 9.1% in 2022? Now it's come down since then, thankfully maybe around 2.6% by late 2024.
Still, that high peak was a shock for many.
It really was, and it highlighted a key risk of fiat money. Governments can just create more of it, and when they do, it can potentially reduce the purchasing power of each dollar or euro or whatever.
Makes sense. More supply, less value per unit.
Exactly. Gold, though, is different. It's finite. You can't just print more gold. There's only so much of it.
Right.
This scarcity, combined with its historical role, makes it an attractive way to store value, especially when fiat currencies are losing ground to inflation. It's tangible, it's endured. It's kind of like insurance against paper money losing its worth.
Okay, that's clear. Another really interesting angle that came up was geopolitics. Specifically, how the U.S. using dollar-based sanctions might be pushing countries towards gold. How does that work?
Yeah, this touches on a really critical aspect of current global power dynamics. The U.S. has quite effectively used the dollar's central role in global finance as a foreign policy tool.
Financial sanctions, you mean?
Exactly. Imposing financial penalties, freezing assets, cutting countries off from the dollar system. The sanctions against Russia in 2022 were a really high-profile example.
A wake-up call for some, perhaps.
It seems so. It served as a pretty stark reminder to other nations, hey, if most of our reserves are in dollars, they could potentially be frozen or seized. There's a vulnerability there.
And gold doesn't have that vulnerability.
Well, largely no, because gold can be physically held within a country's own borders in its own vaults. It's generally beyond the direct reach of international sanctions imposed through the financial system.
Ah, so it's a strategic asset in that sense. Less vulnerable to outside pressure.
Precisely. It offers a degree of financial autonomy, a kind of insulation from those geopolitical pressures tied to the dollar system. So the insight here, gold isn't just an economic hedge anymore, it's becoming a geopolitical one too.
And that seems to feed directly into what we're seeing with the BRICS countries. Brazil, Russia, India, China, South Africa, and the newer members. They were specifically called out as big gold buyers.
Exactly right. The BRICS nations are really at the vanguard of this trend. Their hunger for gold isn't just about economics. It also reflects this broader goal they seem to have, reshaping the global financial order, making it less U.S.-centric.
Moving away from dollar dominance.
Yes, and the data really backs this up. Look at China. Its official gold reserves as a share of total reserves jumped from just 1.8% back in 2015 to almost 5% by mid-2024.
That's a significant jump.
It is, and India's been busy too, adding something like 73 tons just in 2024. These aren't small adjustments. It looks like a clear, conscious strategy by these major economies to dial back their dollar dependency.
Which really reinforces that idea of a move towards a more multipolar financial world.
I think that's exactly what it suggests.
So this all paints this picture of maybe the dollar's global grip loosening a bit.
Yeah.
This idea of de-dollarization.
Mm-hmm.
The sources had some stats on that too, didn't they?
They did, and the numbers are quite telling. The dollar's share of global foreign exchange reserves held by central banks worldwide has actually seen a steady decline. It was around 66% in 2015.
Yep.
More recently, it's down closer to 57%. Now, that's not a collapse overnight.
No, still the majority.
Still the clear majority, absolutely. But it's a noticeable, persistent downward trend over nearly a decade. And beyond reserves, we're also seeing more countries actively trying to settle trade deals in their own local currencies.
Bypassing the dollar for trade.
Yeah, cutting out the middleman, so to speak. And then there's all this talk, still maybe early stages, but talk nonetheless, about alternative reserve currencies, maybe even a BRICS currency, possibly backed by gold or other commodities.
Interesting. So lots of signals pointing towards a more diversified system.
It certainly looks like a slow but steady chipping away at the dollar's near total dominance.
Okay, but let's be balanced. The material we looked at also made it clear the dollar isn't exactly, finished. It's still hugely influential. What keeps it so dominant?
That's a really important counterpoint. The dollar absolutely still benefits from massive advantages. The sheer size and underlying strength of the U.S. economy is number one.
Hmm.
Plus, its deep-rooted role in global trade, the liquidity and depth of U.S. financial markets, it's easy to buy and sell dollar assets. And you can't ignore the backdrop of U.S. military power either. All these things prop up its global status.
Right. Inertia and existing infrastructure play a huge role.
They do. However, the analysis also correctly identifies some, let's call them underlying weaknesses that are kind of eating away at its long-term stability.
Like what?
Well, the big one is the huge and growing U.S. national debt, over $36 trillion now. That scale of debt naturally raises questions for global creditors.
Long-term sustainability questions.
Exactly. And then paradoxically, the high interest rates the U.S. used to fight inflation, while necessary domestically, they actually make gold relatively cheaper for buyers using other currencies.
Because their currency might be stronger against the dollar needed to buy gold.
Or simply that holding dollars at high rates is attractive, but gold becomes comparatively less expensive for foreign central banks to acquire as an alternative. It adds another incentive to diversify. So yeah, the dollar's still top dog for now, but these issues are creating definite headwinds.
Which brings us back to gold. One source called it a neutral anchor. What does that really mean in this context?
Yeah, I liked that phrase, the neutral anchor idea. It gets at gold's unique quality here. It's not tied to the economy or the politics of any single country.
Unlike the dollar or the euro or the yen.
Exactly. The value of those depends on decisions made in Washington or Brussels or Tokyo. Gold's value, while it fluctuates, isn't directly controlled by any one government or central bank's policy. It's universal.
Understood by everyone, valued everywhere.
Pretty much. It transcends borders and political systems. And that inherent neutrality makes it really appealing for central banks planning for a future where maybe the dollar isn't quite so central. It's seen as stable, independent, a reliable reference point.
An anchor in potentially choppy waters.
A good way to think about it, yeah. A constant, perhaps, in a world of shifting currencies.
So with all this going on, gold prices up, central banks buying, this de-dollarization talk, what are the actual practical effects we're seeing in the markets, in the wider economy? How's this playing out?
Well, we're definitely seeing gold's role solidify in investment thinking. It's increasingly accepted, maybe even expected, as part of a diversified portfolio, a hedge against uncertainty.
Right.
But on the practical side, the high price itself creates challenges. Storage costs for physical gold aren't trivial, and the entry price for significant amounts is obviously higher now.
Sure.
And there's the question of market impact. While a gradual shift away from dollar assets might be manageable if there were ever a sudden, sharp move, that could cause real market volatility.
Like a rush for the exits.
Potentially. Though it's important to add, central banks are usually very cautious. They're likely aware of this risk and will probably manage their diversification carefully to avoid destabilizing things. They want to adjust, not capsize the ship.
Okay, makes sense.
Yeah.
So we've talked big picture, central banks, global trends. Let's bring it back home. What does all this mean for, the average person listening? What are some tangible things individuals should maybe think about?
Right. The so what for individuals. I think the main takeaway is really about diversification in your own investments. Seriously, considering an allocation maybe in the range of, say, 5 to 10% to gold or gold-related assets.
How would someone do that? Physical gold?
It could be physical gold, yeah, like coins or small bars, or often more practically through things like gold ETFs, exchange-traded funds that track the gold price, or even shares in established gold mining companies.
And the goal there is hedging.
Exactly. It's a potential hedge against inflation, eating away your purchasing power, and also against possible currency wobbles down the line. It's also just smart generally to stay informed, keep an eye on what central banks are doing, major geopolitical shifts related to currencies.
Just be aware of the changing landscape.
Yeah. And for those really concerned about major systemic risks, a small amount of physical gold held securely can offer a sort of ultimate safety net. But, and this is important, don't go overboard.
Why not?
Because gold doesn't pay dividends or interest, right? It doesn't generate income. And its price can swing significantly. So you need to balance it with assets that are liquid, that you can access easily. Don't put all your eggs in the gold basket.
Sensible advice.
Yeah.
Anything else on the individual front? Like those stablecoins mentioned?
Yes. You might hear about things like stablecoins supposedly backed by commodities. I just urge extreme caution there. Really, really do your homework on their credibility and how stable they actually are before even thinking about them for transactions. Verification is key.
Okay. Solid advice for individuals. Now, flip side, what about businesses, especially those operating internationally? What should they be thinking about or doing?
Yeah, for businesses, especially those of international operations, managing currency risk becomes even more vital in this environment.
How so?
Using financial instruments like forward contracts or options to hedge against dollar volatility becomes more critical if you're doing lots of deals in dollars, locking in exchange rates.
Protecting profits from currency swings.
Exactly. Also, thinking about diversifying revenue. Can you expand into markets less dependent on the dollar? Maybe look towards those BRICS countries where local currency trade is growing. That reduces your overall exposure to dollar fluctuations.
Spreading the risk geographically and by currency.
Right. And for larger companies holding significant cash reserves, they might even consider what the central banks are doing on a smaller scale. A modest allocation to gold or maybe gold-backed securities in their treasury management.
As an inflation hedge for the company's cash.
Potentially, yes, and for balance sheet resilience. Also, businesses need to watch supply chains. If you're in electronics or jewelry, rising gold prices directly impact your input costs.
Good point.
And finally, just general preparedness. Given the potential for more market volatility, if this shift away from the dollar accelerates, even slowly, businesses should probably stress test their financial plans. Assume some bumps in the road, keep healthy cash reserves, be ready to adapt.
So resilience and hedging seem to be key themes for businesses.
Very much so. Adaptability, too.
Okay, so wrapping this up, it really feels like the surge in gold, the central bank buying. It's more than just numbers on a screen. It feels like a genuine signal, doesn't it? A sign of a real shift happening in global finance, a questioning of the dollar's long reign.
I think that's a fair assessment. It's not just noise. The deliberate, sustained actions, particularly by major central banks, really do suggest they're positioning for a different kind of future financial system, one potentially less dominated by a single currency.
Right.
So maybe the final thought for our listeners as they digest all this, think about the potential long-term ripples. If this shift continues, even gradually, what might that mean for your own financial planning, for the global economy you operate in?
Even if a sudden dollar collapse is unlikely.
Exactly. Even without a dramatic event, what does a more multipolar currency world actually look like day to day? And what are the deeper implications of gold reemerging as this sort of